Hey, what's going on, everybody? So today, I know I'm a couple minutes late. I apologize about that. So I wanted to give you a heads up. Today we're talking about HBAR. So Hedera hash graph, if you don't know who it is. I've had a couple other videos on this channel, but there's some things that I came across as I was going through here. So originally I wanted to do a video and set it up and do a few things from the site and kind of go in a little bit more depth. So when I first started doing that, next thing I know, I was like in a huge document that I was reading, getting into that, and then going to do some cross references and stuff. And lo and behold, there's no way I'm going to be able to go through all that in one thing. So I also want to let you know that my son is actually upstairs making a whole bunch of noise, and hopefully it doesn't come out as being too loud because he is wired right now. So with that being said, I do want to get into this. As you can see on, well, not yet. Let me bring it up. So as you can see on the screen, I'll put myself over here. This is our site. And this is HBAR site, Hedera site, if you hadn't been on here before. And I wanted to we're going to start here. So as you can see, it's got 3.65 million accounts created on the mainnet. It had 45.9, almost 46 million transactions in the last 24 hours. 3.73 seconds to consensus finality. And the average cost is about 0.0001 cents. And this is a kilowatt per transaction, 0.00017, which is roughly 1/5 of a watt. That's impressive right there. So with me being background in electrical, that's pretty good. That's better than LED lighting. So I've showed this before, whatever. These are some of the companies, the big companies that are involved in Hedera. And I think these will pop up in the document that I'm going to talk about tonight. And hopefully y'all get some stuff. Hopefully everything's working properly. I do have my screen up in case someone does ask me a question. I'll do my best to look into it or answer it as I'm going through. But this is the first time I've really set up letting people know I am going to go live and actually going live. So we'll see how it goes. So then we have applications, ecosystems. So this is other things, which Dovu, that's going to be in this. Mecca or Mika, I don't know exactly how you say it. That's going to be in there. There's going to be a few other ones in this thing. This company, Timelens, that's going to be in here. So I'm not sure if you know what Hedera is. So Hedera is a decentralized open source proof of stake public ledger that utilizes the leaderless asynchronous, I don't even know how to say that, fault tolerance, hashgraph consensus algorithm. It is governed by a collusion resistance decentralized council of leading enterprises, universities, and Web3 projects from around the world. It is a little bit different. This is pretty secure. So it is on the EVM, the Ethereum virtual machine. So it kind of took that. It basically, in my opinion and what I've read, and hopefully y'all won't kick my butt too bad, is it seems like it's got the security that Ethereum chain does not have. If you've brought up anything, Google search, a lot of these tokens and projects that are getting hacked and taken for millions of dollars, it seems to be Ethereum. I'm just saying, I'm throwing it out there, but HBAR seems to be on their security pretty well. So we're going to run through this a little bit more. These are the use cases. So this is where I started my whole entire thing. And I went, and well, I'll show you that in a little bit. So applications, they got a whole bunch of different applications going through here. Now, a carbon negative. This is what we will end up getting into on part of that document that I came across. And it's carbon negative commitment. So as you can see, they're pretty much at the top of their game. I mean, you come down here, you can look through here, and I mean, so I'm even into Algorand or whatever, but Algorand's 1100x more per transaction than Hedera. That's insane. But you can go to Ethereum, 3,300. That's 3 times more expensive than Algorand. You got Cardano even. I mean, Cardano's a pretty good, decent project from what it seems like. 13,000 times more. So, I mean, I understand that there might have been some changes to this particular thing they've got on their site. I don't know if anybody's changed stuff. I don't know if this is before the Ethereum actually did their final, their initial or their last upgrade. I'm not sure about that. But regardless, they're super cheap. So what I ended up going on was I went over here to use cases. Man, I can't talk today. And I went to sustainability. So if it'll come up, here we go. So I started going and reading this a little bit. So I'll kind of go with as far as I got and show you what I started going into, and then went into a freaking giant hole. Okay, so it brings up a balance sheet for our planet. The need for greater security, transparency, and efficiency within industries such as the carbon markets has never been more pressing. For this market to mature, it is essential that accurate, granular data can be logged and accessed without corruption and collusion. Guardian on Hedera combines a trust layer for multi-party data with a digital measurement, reporting, and verification tool to strengthen workflows that lead to tokenized quantitative outcomes. Build, deploy, or access sustainability solutions that take full advantage of Hedera's low-energy network with world-class governance. So then it says read Miko's carbon report. So I ended up clicking that. And that's where it all started going. So I started getting into this. And so it's a 55-page report. It says Carbon Markets, Tokenization, and the Enterprise Data Challenge. What you need to know about voluntary carbon markets and how to get started. So this was a lot to take in, and I know I missed a whole bunch of what I was trying to gather on this, but I did take some notes to kind of go to, so I'm going to look at that real quick. So one of them was, I know this was a big thing. So as of March 31st, 2021, 3,404 investors with 121 trillion US dollars of assets under management have signed commitments to integrate ESG information into their investment decisions. At least 1/3 of managed funds will be under ESG mandates by 2025. Just to let you know, it's the end of 2023. I'm just saying, it's weird how that is lining up with supposedly our projection of the bull run for cryptocurrency. So that's one of the things that I first saw, and I was like, well, maybe I'll get a little bit further in there, but let's kind of go a little further. So let me see. We went to page 13 of this thing, and it shows that as of 2021, you have Brazil, the European Union, Hong Kong, Japan, New Zealand, Singapore, and the United Kingdom is already in this mandatory climate risk related disclosures. So this is what they tell people or whatever, or let everybody know when they're in their businesses and stuff. They've already done this mandatory thing. So if you go a little bit further, In March of 2022, the U.S. Securities and Exchange Commission, the SEC, which we are all like, because y'all don't do anything but destroy us, under the Biden administration, proposed a set of rules to enhance and standardize climate-related disclosures for investors, which incorporated and extends the TCFD recommendations. It is worth looking at the details of the SEC proposed rules for climate risk disclosures, which, in addition to the TCFD recommendations, proposed more stringent requirements than some weaker implementations. So not only did the SEC go, hey, we're going to implement some stuff, but they went one step further and says, we're going to make it even more difficult and more information you got to put out there when we do this, which sounds about right. So, let's see. So then, what was it? Page 15. All right, this is page 15. And let me see. The U.S. SEC proposal would require registered entities to disclose metrics on their entire GHG emissions in their operations and in their value chains as a whole. For large publicly registered companies, the proposed disclosure metrics include direct Scope 1 and indirect Scope 2, upstream and, if material, Scope 3, i.e., for an example, downstream, GHG emissions and metrics on emissions intensity. So they're basically wanting to set up a cost per metric ton of carbon, which, if anybody's even paid attention in the last few years, they've been talking about this ESG and pushing it, and climate or carbon tax. I mean, they've had it in different sessions of Congress already. They've been talking about it. So far, they haven't been able to get it pushed through, but they have talked about it, what they're expecting to put this at. But let's say, in effect, the SEC proposal extends mandatory GHG disclosure rules from corporates in the compliance market to most large public companies, including banks, issuers, and investment funds, as well as some smaller private companies. So when I heard this, the first thing I started thinking about was a lot of people have been talking about banks closing. Could this be part of that? If banks are closing, which we thought that, the dollar is going to go bye-bye, the USD is going to go under, you're not going to be able to pull it, they're going to do bank lockouts and stuff, and they're going to hold your money kind of thing. So that's why we thought they were doing bank closes. But what if they were closing all these branches because of ESG and carbon? So if they get rid of the building where they don't lease it anymore, they don't have the building, they sell it, then they don't have to worry about paying a tax or fee or whatever they're going to end up calling this carbon tax. And that would make way more sense than what it seems like they're pushing out, or what a lot of people are talking about. So there's another thing, let me find it. Well, it was on 19, but this is basically talking about it. The World Bank estimates that the carbon price needs to be in the $50 to $100 per metric ton of carbon range by 2030. So first off, there's a couple things that I'm not understanding. That you're going to end up making people pay more money. I mean, what are you going to do? Like, feed the earth cash and it's going to cool down? I mean, I don't know what that's supposed to do, to be honest with you. I'm not sure exactly. It almost sounds like it's another tactic to get more of our money to do what they want to do, to push their certain things that they want to do. Let me see. So as they're going through, and I found out that, so by 2030 they want to have it, they think they should say is they say it should be $50 to $100. So I wanted to find out two things. Is this ESG going to stay? So I decided, like everybody else, is ESG going here to stay? And it comes back yes. By 2025, ESG assets are estimated to exceed $50 trillion. In other words, 1/3 of assets under management will be classified as ESG assets in the next 3 years. So it sounds like we are here. Let's see. Taking action on ESG and the crucial issues it embodies, such as pay, demonstrates our respect for stakeholders. Let's see. What is the most important aspect of it? According to the ESG experts, governance is the most important aspect of the elements: environment, society, and governance. This is due to the fact, okay. So that's basically what this report is coming out. So then my next thing is how much carbon does a car release? 4.6 metric tons per year for an average fuel economy with 22 miles per gallon and drives around 11,500 miles per year. So you're looking, we'll just say 5 metric tons a year. So you go back to what I was just reading, 5, you're looking in between there, $250 to $500 a year you would be paying on carbon just for the car or whatever. So, and that's on something that gets 22 miles a gallon. You have got, most people here probably have 2, 3, maybe even 4 vehicles. Are they all good? I don't know. But you have at least 2, so now you're looking at $1,000 a year just to be able to have your car, not counting the car payment, the insurance, the gas you got to pay for, the maintenance you got to. Is it really worth having all these cars? I don't know. I'm starting to wonder about that. So, oh man. Then there was actually a third question that I had, because if you're going to have this whole entire ESG, which carbons, I remember somebody talking about carbon credits. So my next thing I wanted to get into is, can you even invest in carbon credits? So evidently you can invest in carbon credits. So as you can see, you Google it, you ask, it says yes. It does pop off with a few things or whatever on the side here. And I decided to also go over this thing here. Like I said, when I went into just trying to do a simple video, this is what I jumped into and was like, oh my gosh, this is crazy. So we have 3 different ways that you can invest into carbon credits. One of them is an ETF in the stock market. Another one is carbon offset companies, which they have a few examples. And then another one is low carbon companies, which, they're probably going to get kickbacks from the government, with these. So you're going to probably get some kind of interest of some sort probably with these companies. So let me see. I want to say I came down here. Yeah. So you have carbon credit EFTs. Again, I'm not a financial advisor. I haven't looked into any of these companies, but these are things that they're talking to look into. But you have Crane Shares Global Carbon Strategy ETF. It seems like Crane Shares is on every one of these. Now, I don't know if it's a biased little article here on Bing or what. I'm not sure, but regardless. So you have that one. You have the European Carbon Allowance Strategy ETF, which is KEUA, and the Crane Shares California Carbon Allowance Strategy ETF, which is KCCA ticker. Then you have the carbon offset companies. These are companies that develop projects that reduce, remove, or avoid greenhouse gas emissions, such as renewable energy, forestry, or carbon capture and storage. By investing in these companies, you can support their environmental efforts, and potentially benefit from their growth and profitability. However, you may also face challenges such as verifying the quality and impact of their projects. Well, that's pretty much any company that you invest in. You don't know if they're being on the up and up, so you have to do your due diligence on all these. So, which that's kind of strange. They actually had examples up here of these last time, and I don't see them. So luckily, I wrote some of them down, I believe. So yeah, they had originally on this, they showed Native Energy. I don't know the ticker things to each one of these. TerraPass, TERRA Pass, all one word, and Cool Effect. Then you had low carbon ETFs and mutual funds. These are funds that invest in companies that have low carbon emissions or are committed to reducing their carbon footprint. These funds may use different criteria to select their holdings, such as carbon intensity, carbon risk, or carbon alignment. Low carbon ETFs and mutual funds can help you align your investments with the environmental values while also offering potential returns and diversification benefits. So these were NextEra Energy, Tesla, and Beyond Meat, which is interesting about that last one right there. But I don't eat it, so I couldn't even tell you. I don't have a clue. But so let's get back to this Miko thing. As I was going through here, it talks about the price of each thing or whatever. So I did bring up, which I don't see it on my tabs up here of me going into it, but it just basically does a breakdown of everything that they have for carbon and the value, their prices of it and everything, what it's going to be going through. Voluntary corporate cancellations of offset produced in developing countries can be counted toward national emissions reduction targets in developed countries and by corporations in developed countries against their emissions. Carbon offset credit represent a ton of CO2e carbon emissions that have been avoided, captured, and sequestered. They kind of go as, I mean, like I said, it was 55 pages. There was quite a bit in here, but this is what I started looking at here. Supply of carbon credit assets. There has been a sharp increase in new venture investments that seek to solve the supply of ESG sustainability assets primarily by selling carbon credits into voluntary carbon markets. From VC to private equity funds, private venture funds specializing in clean tech investments are now in the tens of billions. Since the start of 2021 alone, 72 climate venture funds totaling $13 billion and 6 growth funds totaling $24 billion have been announced. New and early private commitments include, so we got Breakthrough Energy, Microsoft, which they've been the number one talk about climate change for quite a while. Frontier, which looks like Stripe has that. Lower Carbon Capital, X Prize Carbon Removal, and the HBAR Foundation. They basically put a $100 million fund together for it. While climate tech venture funds target multiple verticals, the individual ventures, they invest in target carbon solutions in single verticals such as, well, regardless, you have Shopify, you have Microsoft, you got so many different companies here verified carbon standard, gold standard. Carbon offset programs provide project validation and verification assurance methods. Registered offset programs, their verification documents, and track offset credits certificates issued by those projects. So then they kind of, when they go talking about all this other stuff on this page, World Bank and everything, they start getting into the private sector. DBS, that's HBAR. You got TMX, I think that was on HBAR's thing as well. Standard Charter, I want to say they've dealt with HBAR, XRP, and XLM, I believe. But I know Bank of America's Ripple. I want to say TD Bank is also Ripple. But again, this goes into what I talked about in one of my previous videos, that you have those three crypto companies that they are meshed together, in my opinion, and they're going to branch out. Now there's other ones. You got Algorand in there, you got XDC in there. I haven't got so involved in XDC, and that's mainly because the exchanges that I've had, I haven't had enough. They didn't sell XDC, so I didn't really, when I had my funds at the time, I couldn't get it. I tried to do Uphold at the time, and for some reason they wouldn't let me buy anything. I have no clue if I messed up on registration or whatever. I have no clue. So again, we got DBS. Visa, I think Visa's been pretty much in all those as well. Consensus. Hedera Network is the most innovative, sustainable, enterprise-grade public ledger for the decentralized economy. The platform is governed by a globally diverse council of industry leading organizations, including Aberdeen, Avery Dennison, Boeing, Chainlink Labs, Deutsche Telekom, DLA Piper, FPOS, World Bank. This has been popping up lately quite a bit. Matter of fact, that was one of the things I was going to look at to do my video for today. Originally was World Bank, or WorldPay, sorry. Google, IBM. These are all things that, I mean, they're working with, that's on their board as it is. Standard Bank, you got ServiceNow, Ubisoft, which is gaming and stuff. I mean, all these corporations that are in Hedera, they're all also in the ESG side of, for the carbons, for carbon credits and carbon, thing that they're trying to set up in the world. So my point of this whole entire, there's Dovu right there. My point in this whole entire article that, like, I've been seeing more about is that ESG is something you might want to look into to see if these companies are involved in the whole entire thing, because evidently, as you saw, it's going to be here long term. So that means they're going to be putting these regulations on all these corporations to keep up with that side of it. So with that all being said, when you're looking to invest in a digital asset or a company on the stock market or ETF or whatever it is, you might want to look to see if they're on this ESG standard, because the ones that aren't, I have a feeling, are going to get taxed and penalized so bad that it's going to be hard for them to actually progress in the world and in that finance side. So I really hope that there was some information that you gathered from this. But like I said, this report, again, you can go to their website, here on Hedera, go under use cases and go under sustainability, and it'll have the Mechic carbon on there. But you can also see this is another name that was underneath there. Companies across the globe are placing an ever greater reliance on carbon reporting, and as such, they are looking for solutions that provide them with the ability to view their operational carbon output in real time, verify their carbon offsets, and produce monetizable certificates. To provide customers with these solutions, Timeliz required a distributed ledger capable of handling large numbers of transactions with low predictable fees. Guess what? That was Hedera. And you have all these companies right here that are in that sustainability ecosystem that I just kind of was speaking about just now. Avery Dennison. They all have good things to say about Hedera, and that's probably why they're on their council. But hopefully y'all got something out of this. I apologize for kind of venting on a few certain things or whatever, but this video has actually gone way longer than I was expecting it to. But I appreciate it. Please give me a thumbs up. Please subscribe. Thanks for the 6 freaking awesome subscribers that I have right now. And I will see y'all in the next one. Y'all have an awesome weekend.